Hey guys, let's just jump into it today. We are going to look at the Clarity Act, what kind of impact this is going to have on crypto, how XRP might play a bigger role, as well as RLUSD. Big news coming out of Ripple with two major partnerships that you will not believe, and how it's going to affect maybe the next generation of finance. I'm going to be doing all of that and breaking it down, of course, with Mickle. You guys have seen him here before. We have him coming in on a consistent basis now here on the XRP pod, so we'll definitely have him jump in today. Before we get started, just always, as I always ask of you guys, do one thing: subscribe. Just like and subscribe. Share this video out there with someone that you think is trying to learn about crypto. And with days like right now, with what's going on in DC, this is the time to get people active, especially if they've been on the fence about jumping into crypto. So do that. We always appreciate it. Let's just get Mickle into the show. How's it going, man?
I am good. How are you doing today?
Nice to see you. A lot happening this week, as you know. DC has been an absolute, I'm going to call it a dumpster fire. It's kind of stinky there anyway, and then you add a little torch to it and it really gets bad.
Yeah.
As they say, which is kind of how the Clarity Act went. I did a post on this that kind of broke down after many conversations over the last week with our insiders. I won't call them insiders, just our contacts at DC. A lot of our interviews, we started it off last week with Warren Davidson, who we had on the show. And then also we had the DeFi Education Foundation, Amanda Tuminelli, and she kind of broke it down for us back then. We kind of knew it was coming. And then, of course, this thing hits 138 revisions and amendments that came plowing into the Clarity Act. And of course, that is what caused Coinbase, along with others, to essentially kind of come back in and say, hey, we're not so much into this anymore. So big deal. Let me kind of show this to you guys right here. Let me bring up the one I want to bring up instead of that one is a different one. I've got a post here. So the Clarity Act scenario that played into this was really built around two things, Connor. And one of them, let me share my screen real quick. So this was the point I was getting at. Clarity Act isn't a regulation. It's a dragnet. This is a breakdown that I made on it. Some of the big issues were a new warrantless search was integrated into one of the amendments. Real-time monitoring, every transaction, that's a problem. This one was Treasury's new special measures, which was basically going to be, we can go in and freeze your assets based on risk. Not on anything you've done, just if we think you're risky, And then end of cash privacy. This would be extending the BSA laws into non-custodial wallets, which kills the digital equivalent of basically using a non-custodial wallet for something like a cash wallet. And then global doxing. This is going to begin to a scenario where it would mandate data sharing with foreign central banks, which pretty much puts everybody at risk out there. So this was a big deal. The amount of changes that hit the act in a short period of time, it was a 48-hour window. And I think in general, the window that they looked at, had they done this inside 24 hours, I think they might have got this through, because people would not have had time to, this was 200 pages, and you probably had a fleet of lawyers looking at this to really understand the amount of changes that were being made. What was your take on it?
Well, that's the general strategy, right? You write a 3,000 page bill, and then you hide everything on page 732, and you try to jam it through. Outside of that just being a terrible way that the system works. I remember someone had a thing for smaller bills, potentially more focused, but I would love to see that. I mean, this idea that we get these things that cover absolutely everything with a whole bunch of hidden amendments in there is really tiresome. I have two different thoughts about this. And obviously, I agree on a high level with a lot of these things being said. For the Clarity Bill, I understand a lot of it's probably coming in from the banking lobby to secure their own kind of power in the system. I do look at some of the things and I kind of scratch my head and wonder how much of a big deal it really is. Like real-time monitoring of like the transactions. It's a public blockchain. So we're going to stop people from sorting and parsing data regardless? Like, that's what public blockchains are. So if we want to throw them a bone and say, hey, you can monitor it, I mean, I don't think we can really stop them from monitoring it. That's part of being a public blockchain. There's a couple other things mixed in there as well that I kind of have the similar thoughts on, like freezing transactions. Like all right, you can go freeze all the Bitcoin transactions you want. It's like, all right, let's see how you do it. There's certain things in here that I don't know. I wonder if it's obviously we want to push and make this bill as ideal as possible. And I think that's what Coinbase is doing here. I'm assuming that Coinbase realizes that, look, they're not going to get it where they need it to be. There is some amount of leverage they can work with. And I always say this, and I think this is how a lot of people run business. You don't take the first deal that's necessarily offered. I think they're going to push back a little bit and play with it. Generally, though, I mean, outside of these things being highlighted by Coinbase, I think it's like there's a lot of really good stuff in this bill. So I really hope they can get to a point where maybe get rid of some of the extreme things and get to a place here. But I think the vast majority of the bill makes a lot of sense. I like how the regulations are being parsed. I think it's pro-innovation. It gives us a lot of the guidelines we need. And I've always taken the stance, it's not going to be perfect. There's going to be a lot of stuff we don't like in here. But guess what? Like, we'll innovate around it, in my opinion.
Well, to a certain extent, I would agree with that. The concern that I always have is that anytime that you give Congress the guidance to be able to control an industry, you end up with what we've seen with the Bank Secrecy Act, which has been a big problem, I think, going forward. And of course, a lot of this really centered around yields. I think that was what kicked off a little bit of the resistance in the beginning. But what was interesting to me is what Pat Toomey shared. This, of course, is Senator Pat Toomey. He shared this on Financial Times. And he basically said, don't believe the banks lobby against stablecoins. And the point he's making is right here. He hits on this, and I did not know this was happening, that China has fired a warning shot across America's financial bow. Beijing has now decreed that from the start of this year, its banks can now pay interest on digital renminbi holdings. So essentially, they are already allowing an equivalent to what we're seeing in blockchain or in decentralized exchanges, as well as centralized exchanges, where we're starting to see yield. So China is already trying to compete with that. And if you look further into it, if consumers can earn interest on their stablecoins, banks right now are fearing that the money from their accounts, especially low interest, which they should have an option, would force a lot of these banks to more expensive funding sources and squeeze their margins. Listen, this boils down to one thing, and that is that banks have been getting low-cost loans to run their business from consumers like you and me for far too long. It's really all it boils down to. The banks would have no problem if they level up and start to figure out new ways to compete, keep your customers, figure out new products and services, and then boom, you've got a competitive model to what's happening in crypto. What do you think?
Yeah, I once again on this one, I understand why you would. So the way I look at it, right, is like stable coin yields. We all can acknowledge that right now, the vast majority of stable coins of any material, that's any stablecoin that's material is a centralized stable coin, right? Yeah. So the bill's not banning yields on crypto assets. It's not banning like secondhand yields in DeFi. It has to do with the issuer paying out a yield on the token. Circle and Ripple.
It was trying to get to the loophole, which was where it would stop Robinhood and Coinbase and others paying yield on it. It would force you into DeFi.
But Circle and Coinbase, right, have very clearly went down the route of trying to become a bank. And I wonder if this is where some of that industry split is, right? Like you have a Circle and a Coinbase who have gone out and tried to become banks. And from all intents and purposes, it looks like will become banks. They will, if they're still able to pay yield, right? Is it more of a regulation thing? I always come at it from this standpoint. If the OCC is going to be fair in granting crypto parties fair applications to become a bank, right? Mm-hmm. And if the real reason to have this bank mandate in there is just to have a higher qualification, right, for who's paying yield in the stablecoin. So I can't come out with my own stablecoin company tomorrow, right, and start offering yield. Do I think that's great? I'm a free markets person. No, not necessarily. But do I think this is some like plot against cryptocurrency companies per se? It depends on how the OCC continues to treat this in terms of fair application. I mean, you have Anchorage a bank, you have Ripple a bank, you have Circle a bank. If they can offer yield on stablecoins, I'm so curious if Coinbase doesn't think that they could become a bank. I wonder what is making them think one way or another that they couldn't just become a bank and then offer yield on a stablecoin through that method. So that's the part of this I'm extremely interested in. It seems like there's positioning between the cryptocurrency companies on sort of, hey, we can work within this. We'll become a bank. We can offer yield on stablecoins. And other ones kind of being positioned here. We're seeming like that's more of an issue. And that's what I find super interesting about this whole topic right now.
Well, you've got stablecoin movement all over the place. I mean, World Liberty Fi is moving up the track. You've got Ripple, of course, coming in very strong right now. Still holding it around 1.3 billion in their market cap. I think this is going to end up moving up the charts as well. You've got PayPal with their PYUSD all now available, and we'll talk about that in a second around the interactive broker deal, what that might mean for Ripple in general, because that's another big jump into mainstream finance. But it gets back down to, I think, a scenario, as long as the idea of crypto is still left at its core in terms of, especially in DeFi, that's one of the areas. The other problem is that if you're getting into stuff where you can start dictating software, then you're dictating speech. That gets into Fourth Amendment issues. Obviously, we're dealing with a whole scenario there. I think if they leave those areas alone, even if they had to forego the stablecoin yield situation with Coinbase, and it would still be able to be done over in the DeFi platforms if they win on the passive versus active, proposal that they originally put out, which was, I thought that was actually a reasonable thing. If you were active with your stablecoins, you could earn, because maybe you're using it for a loan or you're doing something with DeFi. That's a risk. So you should earn, yields on that. If you're just sitting there in a granny account just trying to draw interest, all right, maybe that is one that is a little bit different. So I don't know. This is going to be very intriguing. I know that Senator Scott is trying to salvage this. I know that we've got a meeting with Coinbase today. We'll be talking with one of their lead legal guys, Paul Graywall. It'll be interesting to see what he says about it.
I find the whole thing fascinating. There's a lot of different aspects around this. And the other thing that I find interesting too, right, is back on this idea of Circle being a bank. We know that a lot of why we know Coinbase and Circle have a relationship, right?
For sure.
So like, could Circle just like, they already pay Coinbase and Coinbase pays Circle for the distribution of USDC, right? Could Coinbase just offer a yield on USDC by Circle paying the yield through Coinbase to end clients if Circle's the bank? Those are the sort of things that I find very interesting and nuanced here. And they're things that we can't get, I don't think, from the language in the bill, right? This is going to have to be stuff that's kind of maybe goes to court later. These things aren't being followed up on, but it's these more nuanced things where I think some of the industries, like, look, Ripple, for example, if they're a bank, right, maybe they pay the yield through a different platform like Coinbase. Coinbase, because they're an exchange and not a bank, isn't able to be the direct issuer of the yield.
Mm-hmm. Right.
These are the sort of things that, like, I would love to know the answers to. And it's just sort of these things that get lost in the nuance of the bill. I think that's why you see mixed support here. I'm always under the impression, right? And I was under this impression in the Ripple SEC case as well. There was a while where injunctions were being thrown around in terms of, Ripple can't sell institutions because Judge Torres put out that injunction order. Yeah. But I always made the point, I was like, look, Ripple is a very innovative company. Judge Torres ruled that they could not sell XRP to financial institutions under certain circumstances to how they were doing it before. But they'll just do it differently, right? They'll offer the XRP with different clauses. They'll have different routes for getting this XRP to financial institutions. They're an innovative company. They can work around legal frameworks. I look at this in a similar aspect. As much as I want this bill to be perfect, right? Don't let it be the barrier to perfection, right? I would rather have this bill proposed under this administration that's very proactive, that wants to work with the industry, than pushing this out too far and getting into a situation where now we're talking about the next election. Now we're talking about Democrats taking over the House and the bill just becoming impossible, right? That's my biggest worry. I don't want this to become a situation where we try to get every single player in crypto triple thumbs up and super happy, and then we have an administration taking over that doesn't want the success of any of this, and then we're just back to the drawing board.
Yeah, let's be clear. I don't think that even that would be at risk any longer, because I think now these administrations, both on the Democratic side as well as the Republican side, understand how powerful the crypto lobby and crypto industry is. I think they would play ball either way, whoever's in. It's just a matter of, is this bipartisan or not? I believe it is. And if it is, then it should be done in a way that it gets done right. Now, granted, there's always going to be concessions. That's just politics in general. We get that. But the key here, I think, is there are some bad bills out there that execute in industries that limit a lot of growth. And we are, if you think about the crypto industry, we're in a very delicate position right now because we're at launch stage. So you launch into an over demanding legal framework that sets up decades of legal battles around the world because of the United States and its power in terms of financial markets. This is very important for them to get it right. And again, I agree with you. I don't think it's going to be a perfect bill, but it definitely needs to be better than what I think was proposed in that second round.
So it sounds like in general, you're of the mindset of, hey, let's take this back. Let's get it 100%. Better before pushing it.
Yeah, for sure. I don't think you give up on it at all, because there's been a lot of work that's been put into this. But I think it got the attention of DC. The fact that Coinbase was powerful enough. I shouldn't say Coinbase because it really wasn't them. What Coinbase did, which was brilliant, and it's kind of very, blockchain-like, they activated the crypto investor. They activated. And I think once you combine what Coinbase did with what they were doing on trying to do awareness around not only Clarity Act, but everything we did last year with the Genius Act, you combine that with X. And I think those two platforms in combination, I think I saw numbers of almost 300,000 people reached out to their senators based on, what we were seeing coming out. That's a lot. You move that many people that quickly that are influential voters, possibly high net worth individuals in their particular areas, I think you get the attention of senators really quickly. Clearly you did, because this is what happened. It forced them to pause a vote.
I think the biggest thing that, no matter how you look at it, that you can take away as an outstanding positive from this is the fact that the banking lobby cares so much about this. I mean, talk about a huge validation for everything being built here. For the longest time, it was this technology is not important. No one cares. Push it off to the sidelines. There would be no reason to be spending this much time and effort.
Right. It is kind of a hidden gem in reality. They clearly see this is a real threat to the bank business. So that tells me one thing. Whether they get favorable positioning or not, it tells me they're committed.
Oh, yeah. I mean, for years, it was this technology is not that important. Oh, there'll be better stuff. Don't worry. Look the other way. You wouldn't be seeing this level of effort unless there wasn't real legitimacy here. And this is one of the points I always make when I make my YouTube videos. Look, I'm a big enthusiast in crypto, right? I'm a big enthusiast in this space. I know a lot of smart people who are enthusiasts in this space, and we all agree. But there's something special about the competition, the people being disrupted, full on capitulating and acknowledging that as well, And I think this is that. If you've ever needed something to show you that this isn't just people who like the technology hyping it up, that there is real fear on the people being disrupted of the power of this technology. This is it. This is showing you that this is all very real. This is happening, and they're going to do what they can to maintain as much power for as long as possible. And if you want to take anything positive from the delay, not liking the bill, liking the bill, this should be a huge validation of the tech itself.
Well, and it's also the gateway for mass adoption.
Yes.
Because if you think about it, if these guys get into it and understand there's real pressure from whether it's centralized exchanges, DeFi, doesn't matter. If they see enough pressure globally, which is really what's happening now, with the little move that China did on just being able to their banks to offer stable or yields on their own digital currency. The fact that you have that already starts to lean the pendulum forward into quick acceleration into the industry, which is what we've been talking about. Remember, guys, we are a $3 trillion market cap. That is a baby, in the industry right now overall. That's a big deal.
Oh, absolutely. I could not agree more.
I want to thank our sponsor today, and that is Uphold, where you guys can earn crypto better. A lot of things happening with Uphold staking rewards, so you can stake up to 20 different cryptocurrencies and get into the reward side of things. New tokens, early access, along with full transparency. This is one of the best platforms out there to make trades on when it comes to crypto. The other thing you guys should be doing is this right here. Get the card, the XRP rewards card, which comes in the form of an Uphold debit card. And the nice thing about this, guys, is you can do this without a credit check. Also get up to 6% back on all your purchases for the first 3 months. You can get up to 10% back with a direct deposit stacked in on this. So this is one of the best values out there when it comes to a debit card where you can get into your digital assets. Make sure and check out Uphold. Use the link down below. Let them know we sent you.
Hey, let's hit on this news right here because this is big news. RLUSD stablecoin gets an epic institutional boost. This, of course, is talking about Ripple investing $150 million into LMAX. The LMAX Group partnership, this is a multi-year alliance now with Ripple. It's going to provide $150 million in financing. So in the exchange, LMAX is integrating RLUSD and its core collateral asset for its institutional clients and bank funds. So that's a big deal. And on the heels of that news, you had Interactive Brokers coming in at almost identical. It was like, is Ripple doing these deals in 6-packs? What's going on here?
Yeah, it's just really exciting to see where Ripple is positioning themselves. And, you know, for the longest time, it was Ripple is a payments company. And I think what you see right here is Ripple really moving to a settlement company.
Yeah.
Ripple is really trying to position themselves in the back end of a lot of these large dealers, whether prime brokers and or exchanges. And I think this is just another example of Ripple moving into that institutional settlement space. I think there's going to be a lot of new players stepping into the crypto trading and settlement world. And I think a lot of those are going to be using Ripple as a back-end settlement provider. LMAX is one. I think you're going to continue to see movement in the United States with large houses and broker dealers and settlement platforms looking to upgrade their infrastructure. And I think that is a pristine place for Ripple to sit. I think they're going to continue to look to target market makers, really anyone that handles final settlement. And I think this is a huge expansion from XRP being a payments token to moving into a liquidity token. And it's something that I'm extremely excited about. Interactive Brokers, I think, is just another perfect example of them moving into that settlement space.
Well, and you think about it, they're basically letting institutions use this now to post margin for trading futures for CFDs. So that in itself, so the impact on XRP is real because this is going to drive TVL on XRP Ledger. So you look at all these institutions parking millions, maybe billions in RLUSD in the ledger to back the trades. I mean, this just deepens the ecosystem liquidity. This is huge. I don't think a lot of people realize that how big this is because this means dominoes, baby. Dominoes.
And I think one of the biggest things too here is that where Ripple is positioned in this entire thing. For the longest time, there's been this lack of a bridge from the traditional system to these decentralized systems.
Yeah.
And it's like we've built all this really cool stuff in the cryptocurrency world, but there's been no bridge, right? We tokenize these assets, they don't get volume. Ripple is stepping in and becoming that bridge. They're integrating with the traditional system, integrating with these traditional platforms, and creating easy ways for them to access this crypto technology. And I think that bridge is so critical. It's what allows the trillions of dollars locked in these legacy systems to finally start leaking into these new decentralized systems. And I believe what Ripple has built is the perfect funnel to allow that to happen.
Yeah, the argument that I think a lot of people pose to me is really around the auto bridging concept, which is where Ledger is designed to automatically find the most efficient path for a trade via the liquidity option. So, you know, that I understand. But if you look at that as RLUSD, pretty much the destination asset, if you're wanting to maybe swap yen for RLUSD, then it's going to route that through XRP in most cases, if it's the cheapest path. Are you at all worried about that? Or do you think it doesn't matter because the amount is going to be so grand that this is, you know, it's going to lift all boats?
So my theory on this, I think, is a little nuanced. Completely discounting, right, the core functionality of the XRP ledger and auto bridging and XRP being locked up. I think there's two things that are always going to be universally true. XRP is always going to sit as a pristine asset on the XRP ledger that is always going to function as a last resort for liquidity. And the reason for that is because XRP is going to always be the only asset on the XRP ledger that's completely decentralized, neutral, and without an issuer. This alone positions XRP on the XRP ledger to have a very unique value proposition to it that I personally believe will sit very similar to where gold sits in the current financial
That's a good point. Yeah.
It demands a huge amount of value, and this is just a new place for that value to sit and be prominent. The other side of it that I think is really important too, that I think is generally missed or overanalyzed, is just financial institutions moving into RLUSD and working with Ripple, in my opinion, is going to cause a huge desire and net demand to invest in XRP. I personally think that regardless of if the flows are directly connected or not, just having that momentum around the ecosystem is going to cause a lot of people to be interested in investing into XRP, to be net exposed to the increased utility, increased demand, increased everything around this whole ecosystem. And I believe those two things are always going to be universally true. I think RLUSD will take up a whole bunch of settlement in the future and be a big part of pathfinding. I think XRP will continue to be, but I just think these headwinds, it's like a snowball rolling downhill. It doesn't matter if we get every piece of snow, right, getting sucked into XRP, but this thing is just getting bigger and bigger and bigger. And ultimately you have this mass that's too big to be stopped. So I think RLUSD and all of this stuff is only net benefit to XRP over the long run, because you're creating an ecosystem that's more appetizing and more useful to larger and larger players. That just brings more money into XRP.
Yeah. Yeah, to my point, it was hitting is that it just reduces the reputational risk that has kind of plagued XRP, but now this is going to basically validate Ripple's product suite as, you know, safe for traditional finance, especially with what Interactive Brokers is doing. I mean, that's a publicly traded company, huge account base, so it creates a lot less friction and less of an on-ramp issue. So you think about millions of IBKR users would have RLUSD in their accounts.
Yeah,
that's huge.
Huge.
And when they realize the functionality of this is the beautiful part.
And it's one of those things too, right? Because like I forget who was making it. Someone in the political world was making it. And it was this whole idea of, right, like how people end up perceiving that value, right? So people want to be net exposed and invested in crypto. I think we continue to see that there's a huge, huge demand for people to invest into this asset class, right? Interactive brokers using RLUSD on the XRP ledger. Oh, that's super interesting. I want to invest in XRP. People at Interactive Brokers seeing RLUSD, right? Oh, the XRP ledger powers this. Oh, net clients invested in XRP. All of these things create network effects, which make more people interested, which ultimately creates more demand. So it's a flywheel of adoption that just makes it more prominent in society. This was one of Jack Dorsey's biggest caveats with Bitcoin, and one of the biggest things Jack Dorsey worries about with Bitcoin. Because Bitcoin doesn't have a lot of these same level of institutional use cases, he worries Bitcoin could one day become a niche collectible for the Bitcoin community, while something like XRP, right, that is building these rails and all these different avenues, right, is forcibly ingrained into society as a systemically important asset that sits at a higher level of demand than something that is more of a niche collectible. Yeah. I don't know if that's 100% how all this plays out, but I think it's a very interesting way of looking at it, and how RLUSD over the long run just brings more eyeballs, more credibility, and bigger players to the XRP ecosystem.
I wonder, though, if you look at these deals, you know, of what's happening right now with the LMAX and with IBKR, is that if you could get into maybe like a regulated yield fortress kind of concept. Think of it this way, you know, because you're not going to match DeFi yields out there. So you got to look at risk, kind of a risk-adjusted mean. And if a yield's significantly higher than traditional savings account, it's almost like money market. You think about it as a money market fund in reality. You've got Fidelity accounts right now. You can be in a money market fund earning 4%. Imagine if you could start to do things like that inside of IBKR or into LMAX or somewhere of that name. This gives you kind of a whole new infrastructure around yield generation for that. So do you think that could be a play that comes into this? Because remember, I think it was Mataco, wasn't it? The Mataco acquisition? Yeah, it was for custody. Yeah. So that could eventually become a big play in how this could get integrated. What are your thoughts on maybe RLUSD becoming of an yield asset inside banks?
Oh, I think that's absolutely something that I think is going to happen into the future. And you're right? It's never going to match DeFi yields, but it's just going to be different levels of risks associated with it. I mean, I think anyone can go look at a chart of how much is hacked from DeFi on any given day. I mean, you're getting a higher yield, but I mean, you're really exposed to a smart contract. And for all the great aspects of what a smart contract is, right? The vulnerability is it's a decentralized piece of code, and there's a huge financial incentive for someone to crack it. You don't have that, right? Sitting in cold storage. You don't have those things sitting in an institutional custody account. So those are just things that I think people need to realize. I think sometimes people hear the word decentralization, right, and open source, and they say that can only be good. But I think there's probably a decent amount of it that presents its own challenges and problems as well. And I think these things will get fixed and have to get fixed for institutional DeFi to really take its next legs. But I think there's a huge application for people who aren't interested in taking that level of risk.
Imagine a hybrid yield product for banks. Imagine you have cash over in banks, you convert that to RLUSD, the bank then, because this is what they're doing now in open markets, they deploy out RLUSD into low risk DeFi strategies, institutional DeFi strategies, whether it's, lending on XRPL. Now you've got a liquidity provision for things like FX pairs, which would be huge, which is where a partner like LMAX comes into play.
Yeah, that's the vision right there, in my opinion. I mean, that's where we're headed. And you have different market, you'll start to have parties who are willing to take the risk to provide a guarantee to parties who don't want to take the risk of running the strategy and just want to provide capital. And then those people who take the risk, they'll provide guarantees and they'll look to make X percentage to guarantee the riskless rate on the other side. And I think that's where you start to have that flywheel of the institutional DeFi opportunities out there producing a net return for people who want less risk on the spectrum. And I think that's where you start to get to a really exciting place, right? Where you have the DeFi market fueling the CeFi market. And I think that's a huge part of where this is headed. And I think that's always been a place that Ripple has net positioned themselves a little bit differently from the rest of the industry. They've always sold their products with the underlying rails of the XRP ledger and that decentralized framework in place, but with the centralized application in front to make it easier for financial institutions to step into the mix. And I really do think in the same way the internet is built on decentralized technology, but we go through centralized application layers to access the decentralized rail. I do believe that's how the internet of value is going to be built out as well. So I think this is a huge step in that next level of adoption.
Well, and you think about retention, because this is the problem that I think the industry is going to have when a lot of these things are unlocked to traditional finance, these high yield, scenarios that play out in DeFi. But if you look at a utility, think about utility kind of locking up what this would look like. So if you were trying to prevent customers from chasing slightly higher yields elsewhere, but you make RLUSD essential for operations like an RWA, you could go with RWA tokenization, someone like an Open Eden or a Securitize, which is already partnered up, that would allow you to basically have real world assets into this. So this would give you a whole new layer on being able, especially for banks, this would be an instant slam dunk, I would think.
No, I totally agree. And David Schwartz has said this, right? So David Schwartz has said multiple times, and I always found this to be the really interesting side, that he believes that retail adoption for crypto is going to happen through institutional adoption, that real retail adoption for crypto, it won't happen until financial institutions adopt cryptocurrency and the net clients of those financial institutions then adopt cryptocurrency on behalf of the financial institution, building products that lead them down that road. And it's just always been one of those things that, well, the whole cryptocurrency industry went down one path of going directly to retail. Ripple went a different path, and it's always been the strategy that I've liked more. I think it's had its downside in the short term. I think over the long run, I think that's the winning strategy.
Yeah, and it would almost look like DeFi in reality. If you think about the bank's role in this, cross-collateralization, this would allow institutions, whether it's a hedge fund or a family office, wouldn't matter, they could use their holdings, RLUSD holdings, as collateral for trading other assets, stocks, FX, without liquidating the stablecoin.
Yes.
So, dude, this is a hack.
I know there's so much coming on this front, and there's so much initiative to really make this, what we're talking about here, a huge initiative for where the future of this entire ecosystem is going. So I just know there's a lot of really interesting and cool stuff coming on this front.
Do you think, I feel like the banks need to start sniping in blockchain. I think they got to start stealing talent. It's the only way. They got to start getting smart people in there.
I agree. You know, this is the argument that I've run into a couple times. I remember when Circle IPO'd, a lot of people were saying, oh, well, Ripple can buy Circle, right? And why these big banks will buy Circle.
Yep.
I don't know. Like, people often make the assumption that a lot of these crypto front runners are up for sale. I think the founders of these companies know too much about what the long-term value is. Like, like, what would Circle sell out for? I don't know what it would be. It's certainly not 20 billion, or I wouldn't. I mean, I think Circle's probably looking at like where this market is headed and being like, I wouldn't. It's so hard to put a price on where this is going. They failed so far. They failed. The traditional banks have failed to make their cryptocurrency presence. And I think we talked about this the last time on the show. They couldn't even figure out custody. They're going to have a tough time building competition. I think they're just slowly becoming an ingrained customer and client of these cryptocurrency companies.
Yeah, and that's fine. I mean, you look at tech, it's been like this for a while. It happens in all other industries. The tech companies become the supplier back to the back of house. I don't know if you're following Andrel, which is a defense, startup by Palmer Luckey. That's a good example. Someone that's just super brainiac that basically is out innovating the best in the business in terms of defense. That kind of feels like what Ripple has done, because they're taking on all the stalwarts and are winning.
Well, that's why it was always so funny to me. And it's a headline that I used to have a hard time with when I was first getting in trouble. But like, this is the next XRP killer. This is the next Ripple killer. Then you see these projects that don't go anywhere. Like the amount of times I've seen Goldman Sachs crypto trading desk that still doesn't exist, or JP Morgan coin X, Y, and Z that like I can't see any, like all these different things, right? Or all these initiatives, and people always have the assumption, how could the legacy player miss out on this?
Oh my God, it happens
with all
this
money and all these employees and all these things miss out on it. But like, it's the same reason Blockbuster went under. It's the same reason why you have these e-commerce companies just run circles around the rest of the retail business. It's the same reason why the taxi and automotive industries are completely flipping on its head with self-driving. They just don't have the talent. They don't have the resources. It's not their business. These banks are not blockchain, and these banks are not blockchain coding companies. They're not development houses. It's a completely different world. And I think we're just going to continue to learn that the innovators in this space have a huge net advantage. And unless the legacy players open their arms and adopt that innovation, they're going to go the way of all these other companies. They end up getting disrupted on a certain level.
Yeah, this is a big, it's like anything in terms of innovation. You have these seismic shifts in the landscape. And you're right. I mean, there's been, example after example that this has not worked for the incumbents in most places, unless they get really sharp and they innovate, because there's a handful that have been able to kind of ride through some of this. Now, can they hold? That's the real question. I mean, you look at ETFs. I mean, all the ETFs, they've been around forever. And here you have institutional demand pushing even further into all the top ETFs, like what we're seeing with XRP, ETF inflows, 17 mil. Total assets hitting another 1.5 billion right now. So this is going to go nowhere but up, in terms of these units. So this is huge.
This full circle, right? This probably is a big reason why banks want their yield to be only from them. They're trying desperately to figure out a place in this industry that they can say, okay, you guys are about to take everything from us. Leave us this. Let us have this.
Give us
Leave
something
us as a critical component of it. And I think that's probably also why, Paul, you saw so much pushback when the Ripples and Circles of the world went to go get those banking applications. It was the American banker was coming out saying, you can't let this happen. You can't let this happen, right? Because those walls that they put up are slowly starting to crumble. And they're desperately trying to say, well, we can't keep up on the tech. We can't keep up on the innovation. Let's go get a piece of legislation put in place that makes it so only we can do this. And it's something that everyone needs. And even that is falling apart now because the cryptocurrency companies are saying, hey, now we're banks too. So it's going to be a tough one. I think the winners are going to be the players that embrace it the most. I know Fidelity's been very early to adopting this stuff. I know a lot of internal products there that I think are very compelling and that will continue to do well. I think the players that have really held their arms up, they're going to have the hardest time.
Well, it's going to be one of those points, though, that I think are important, and that is the scalability of this industry in general. It's going to be pretty significant. I mean, you look at the current market overview right now. What are we setting on? 3.2 trillion, volume at 107 billion. And this is still just games right now being played in crypto. We haven't really seen massive moves in the market for sure. And I think the fact that we're continuing to see, I'm kind of curious, do you think we're in a bull run, or do you think this is a little bit of a hype cycle that we're in right now?
I'll take I actually really don't even think we've really had the start of a bull run. I think a couple cryptocurrencies jumped out ahead of the market, and XRP specifically because of those ETFs. I think the Solana ETFs, the Bitcoin ETFs got that sort of the industry going ahead of everything else, and they have a bit of a head start. But I look at this as a very promising next 3 years under the current administration. I think clarity is in front of us. I think a lot of these adoption metrics are in front of us, and I think price appreciation is well in front of us. So I think we're just at the very start of the bull market. And for a lot of the industry, the bull market hasn't even really necessarily started yet.
Well, and that's the point I keep making, is that we are still a $3 trillion industry, not much up from our last 2021 run, when you look at 2.4 trillion and where we are today in terms of overall. Now, granted, we don't have currently the meme coin craze going on. We don't have a lot of those, from 250, number 250 altcoin down to 350 altcoins that are generating income. It's really boiling down to it, Mickle, that it's kind of like the top. It's almost like the crypto 100. Instead of the Russell 2000, you have the crypto 100. Do you feel like that's going to be the universe for crypto in the future, or do you think there will still be outliers in the market?
Oh, I think there will be outliers. And this is the point I've been making. I think there's going to be different sectors that go into these bull markets. I mean, I think this started, maybe, I forget which summer it was, but there was the DeFi summer, and anything in DeFi had a bull market. Everyone got really excited about DeFi. And then there's like this meme coin thing. And, I think there's going to be cyclical markets where the people get very excited about stuff. But I think the stuff that has the ETFs, that long-term application, the real institutional utility, right? You're just going to have very consistent inflows with this stuff over time. And I always liken it to what we saw in the very early adoption of the internet. There was a lot of different cycles in there where different things became popular, whether they were certain chipsets, whether they were hardware manufacturers, right? You had different cycles of things that were interesting, and 90% of the companies in that fad died off, and the top 5% became giants. But you had just core infrastructure players, right? The Apple, the Google, the Amazon, right? Like, no matter what was happening in these cyclical industries of the internet, these big blue chip players continue to dominate and see long-term consistent net inflows. And I just think that's where we'll go with crypto. I think the same exact people, which are just humans in general, that traded and bidded and built up the internet cycle, you'll see those same emotions and that same human psychology in the adoption of crypto. So I think it will be very similar.
Last point I want to hit on is again, the risk that could be brewing, from an overall market. And that is what's going on with MicroStrategy. And I'm just showing here again, you look at the amount of control that MicroStrategy is currently positioning in versus the rest of the holders of Bitcoins and digital asset treasuries, and the way that he's generating basically new financial instruments to really grow the business. Do you think this is sustainable, and where is the cliff?
Man, I hate the financial instrument side of it. I think, I've heard a lot of people who are very pro MicroStrategy. A lot of them have flipped the anti-MicroStrategy. It's a really hard one for me. I think I've talked about this before. I thought MicroStrategy's time came in the summer of 2022. After the FTX thing came through, I was like, I remember I put out a post and I was like, the market hasn't bottomed until MicroStrategy goes under. And I was like really confident that was when it was going to be their last hurrah. They were buying so much Bitcoin, Terra Luna, FTX, all this stuff blew up, and they survived. And
they don't go away.
And I think we'll see what happens this time. It's at a critical level right now. I think if anyone looks at the chart, they would see this colossal slide and MicroStrategy desperately trying to hold the 150, 170 level. My skepticism comes in as I clearly got it wrong before. I thought they wouldn't be able to handle the last significant downturn. They did. They came out of it, and they're still going. So I'm not going to be sitting here making the same projection again and getting it wrong and doubting, because I want them to be mega successful. The last thing I want to see is anything happen to MicroStrategy. That's a big headache I don't want to deal with. I have a lot of problems with what they do. I don't like certain aspects of it, but they've been resilient before. I hope they continue to be resilient. Is really
I don't know if you saw the news on Tom Lee. He's out in Vegas doing his investor meeting. They're trying to raise a lot more capital and opening up these shares. And the point that they hit on early from some of the data that was coming out of the meeting is that apparently there might be an altcoin aligning with what BMNR is doing, which is another digital asset treasury, behemoth that is starting to develop here in the ETH ecosystem, which I'm always worried about when you get those centralized characters like what we have with MicroStrategy, because then they become a little bit of a risk to the market itself, which is always what I'm concerned with.
Yeah, and my problem is really who's coming in on these things. MicroStrategy, I guess, Tom Lee, he wasn't even really he kind of stepped into the Ethereum ecosystem. I think
there's a Bitcoin guy.
Yeah, if Vitalik came out and Vitalik did it, maybe there would be a ton of very interesting momentum, because people see him as someone who they would like it, but I don't know, Tom Lee's got to build it, right? At the end of the day, these DATs are confidence things. And that's why I kind of like what Ashish Birla did, because he's so well known in the XRP community, he has so much respect. I think there's going to be a lot of people that say, I want to have exposure to him. Mm-hmm. I know his track record. I know what he's done in the past here. I think the problem is when you have these random people who come out with these DATs, and it's okay, well, who's going to actually want to allocate to my DAT when they can just go buy an ETF? You have to be bringing something that's interesting. I don't think a lot of them do that.
Yeah. Well, I mean, this guy is, I don't know how to take him just yet. Is he a better investor than Michael? I think Michael Saylor is probably the more intricate when it comes to the financial products, but this guy is intriguing because he partnered with I don't know if you saw Mr. Beast and his financial product layer. They put in $200 million in that program. I think you may end up having a next generation if we get Clarity Act through, and then you have companies like Beast Financial starting to make their way in. They're going to make a big dent in Gen Z, and to a certain extent, maybe even the alpha generation coming forward. So interesting times ahead here, Mickle, for sure.
Yeah, and I do like Tom. I've always been a fan of Tom Lee, the way Tom Lee invests. He has a very similar mindset to myself. He likes a lot of high growth tech companies. He's been very successful in picking those out. It just comes down to, at the end of the day, these DATs are strategy companies, right? Yeah, you have to you have to say, hey, I love Ethereum, and not only that, I love Tom Lee's management of how they're going to be in Ethereum. And for me, it just has to do with who's the player stepping in and who's doing this. Coming in, it just seems there's a lack of authenticity there, in my opinion, where it's well, why don't I just I don't know, maybe if Galaxy Digital had an Ethereum DAT, I might be more interested than what Tom Lee is doing, right?
Yeah,
if Joe Schmo starts a Ripple DAT or an XRP DAT versus Ashish Birla, I'm going to be more interested in Ashish Birla. So it's a quality thing. And this whole idea of let's just spam the market with 1 million Bitcoin DATs, it's well, what you found out is the market didn't care about any of them, and it puts trust in Saylor. But if Satoshi came out, right, and started a Bitcoin DAT, I mean, I don't know, maybe Saylor's DAT would be gone overnight.
Yeah, people would be paying attention for sure. That's something. Hey, listen, we got a lot going on in the market, that's for sure. There's nothing short of news right now. It is absolutely on. And if you're trying to play the game, guys, and all of you I know are, hopefully you're watching this, you're checking out Mickle over on his YouTube channel, and many others that I think are doing a great job on getting out there. We're going to have all kinds of cool partners. We're going to drop in some new partnerships with Tangem coming in. We will be at the XRP Las Vegas event this year, announcing that we are the exclusive media partner with XRP Las Vegas. We'll be doing a huge event out there. So listen for some stuff that's coming up. We'll drop it here on the show and all that good stuff. Mickle, was good seeing you, man.
It's always great coming on. Always easy to fill a podcast with this much news coming out. So always a blast.
I love it. We'll catch you guys next time right here on the XRP Pod. Take care.